Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the breakout attempt above yesterday's high ended up failing, and ES returned right back down to yesterday's VPOC at 52.75. At this point, heading into the open, our short-term bias continues to be neutral, and we are open to a move in either direction. Now, this 2152.75 area has attracted a lot of volume, and often we see directional moves being launched off of important high volume nodes. So keep an eye on 52.5 to 52.75, and if we are getting a strong directional move that's originating from around that area and there is sufficient momentum behind it, then just keep in mind that it could actually continue and we could get some short-term directional movement. In terms of our directional bias on the downside, if we break below 46.75 to 48.75, then that would signal the sell side in control. And from there, we could go down and test the 40.5 high volume node, the 37 to 39 support, and possibly even 31.5 to 33.5, where responsive buyers can still be active. But in order to get that strong directional movement, we are going to have to see broad market weakness, the other markets also participating and heading lower, and sustained downside momentum. On the upside, we have short-term resistance at 56.75 to 58.75. A breakout above that area would be the first signal that buyers are regaining control. And from there, we can go up and test 62.75 to 64.75. Now, if there is directionality in the markets and there is sustained upside momentum, then we don't necessarily have to stop at the initial resistance zone. And if we are launching from this 52-53 area and going higher, we know that the range potential is not going to be exhausted by initial resistance. And if there is sufficient upside momentum and broad market strength, then we could even go higher and test 66.75 to 68 quarter and possibly even 70 quarter to 72.75. Again, in order for that to happen, we do have to see that big momentum come into the market with the NYC tick holding above zero. But if those conditions are present and we are seeing the other markets hold up and actually head higher, then we could be looking at a move up to 66.75 to 68 quarter, and even 70 quarter to 72.75 would not be out of the question. So right now we do have to be pretty flexible with our intraday bias. If we're holding above 52.53 and we're not seeing any clear-cut signs of weakness, then given the recent strength that we've seen in NASDAQ and even the Russell, it's still going to be better to give the benefit of the doubt to buyers above the 52.5 to 53 area. And in order for the market to go down, again, we are going to have to see clear-cut signs of weakness and sustained downside momentum. So until then, our bias is going to be neutral, but if we break either to the upside or to the downside, then that is going to really set the intraday bias on the day. So even though right now things are very balanced and very neutral, just keep in mind that the market could go directional short term off of this 52-53 area. So those are the main ideas heading into the open. Let's see whether the buy side can maintain the recent control, and we'll take it from there.